Hi dear traders and investors, today is Tuesday, January 16. I'm glad to discuss my trading ideas with you. My bearish trading plan for the euro-dollar pair has worked out well. The euro slumped at night. It has been still extending its weakness. I hope you've earned from this move. Now I'd like to share a new trading idea for gold. Here's the chart for gold on the MetaTrader 4 platform. The precious metal took a nosedive after robust buying activity triggered by the US non-farm payrolls. Let me remind you that the NFPs were in the green and bullish for the US dollar. So gold fell in response and then shot up. We earned on this drop. I missed the following rally. The price had pulled back to the 50% Fibonacci level. This level has been already tested and broke the low of the American session on Friday. Now I assume a nice climb. The instrument is currently between the 50 and 61 Fibonacci levels. If you're ready to risk, you may set a stop loss 2,600 pips down. Hence, you may earn 2,500 pips on long positions within a large three-wave structure. The price could update the high of January and complete this three-wave structure. If you're an ambitious trader, you may hold your long positions until 161% Fibonacci level. The gold now offers a nice entry point. Oops, I forgot to check the economic calendar. Yesterday, US trading floors were closed on Martin Luther King Day. The crucial news for the greenback will be retail sales tomorrow and unemployment claims on Thursday. I foresee high volatility at this time and I'm going to take part. I'm aimed to earn on the greenback weakness. The USD could also screw up. I'm anticipating lots of market catalysts. We should take this advantage to trade. If you're greedy, you may search for trading signals on lower timeframes. Now the profit-loss ratio is 1-to-1. The euro-dollar pair gave us an opportunity to enter the market at a swing high. I opened short positions with a profit-loss ratio of 2.5-to-1. It has a nice trend. Now the euro-dollar pair is trading lower. There is a cluster of the seller's stop losses. Be cautious when buying the instrument. Sharp swings formed after the news are dangerous. Perhaps the price will hold its decline, rebound at a swing low and extend its fall. By the way, yesterday I closed some positions at a break-even when I tried to sell the euro. Eventually, I grabbed the down move. The Australian dollar went lower. I showed a curious target. Major currencies including the Aussie, the euro and the pound are trading in this way now on the back of the US dollar's weakness. Forget the major currencies used to be independent of the US dollar. The greenback is ruling the market now. The Australian dollar dropped to a swing low of December. It's a zone for buy positions. I remind you that I advocate for long positions on this instrument, anticipating 0.69 to be hit. You may take a risk and set a stop loss 800 pips down in the hope of grabbing 3,000 pips of profit. I don't like inventing plans based on old swing points. It's better to consider fresh swing points. If we detect a recent swing low, you may set a stop loss 500 pips down and take 3,000 pips. Until the lows are updated, the instrument remains in a bullish trend. The pound-dollar pair is also trading lower. The instrument formed some bearish targets. Some traders discovered breakout in the futures market and the spot market. There are no interesting trading ideas for a while. I underscore that the US dollar is setting the tone for all instruments. What do I want to see in the pound-dollar pair? I reckon the pound could slip lower and then rebound. It would be great to go short from that rebound. The thing is that the pound could not update its lows. I don't see any traps now. The US CAD pair is going up amid the strong US dollar. The instrument approached the first resistance. The price could climb higher to swing high. The instrument could get stuck under selling pressure until the highs are updated. It would be a good idea to plan short positions, bearing in mind a further decline in the US dollar. The dollar-yen pair has been higher highs and higher lows. All targets have been hit. The instrument aims to hit a double top that was left untouched. The buy zone was not tested. During buying activity, the dollar-yen pair tested a swing high and hit an upward target. The same happened with the euro, the sterling and gold. My review is over today. See you later and good luck.